How many of you charge to deliver things to your client? It's plural. Some of you don't. Money left on the table, right? Now, the reason why I also think it's important to break this down is because if you've got a $2 million business and your delivery income is $2,500, there's something that's disproportionate there in terms of an opportunity. Remember, this is about profit and loss, making sense of it all, more profit, less loss. We're looking at ways to make incremental income in your business that you may not have thought about before. And if you're delivering value to a client, you want to look at ways to be able to make a little bit more money. Because guess what? If you weren't delivering that to the client, they have to schlep themselves to that retail or showroom and pick it up themselves, and that takes them time, which is money. And if they're a lawyer, they may bill out $500 an hour for their time, and yet you'd be delivering something to them for free, which will cost you money, right? Yes. So you got it. So there might be other income streams you have that you have created as lateral business opportunities for yourself. You want to track it, because back to the choice about what you do in your business, you may find that there's unique things you offer in your business that you make a lot of money for that have high profitability. We'll talk about profitability in a moment. So this is the total income. Everything you do throughout the course of a year, all of the revenue needs to be collected here so that you know how much at the end of the day money goes into your business for what you do. Clear on that? Very good. One last question. Oh, one last question.
This was something new that happened to me just recently, but I received a gift, a substantial gift from a client.
Yes.
I have no idea, well, I know what to do with it, but I don't know how to report it.
Was it a financial gift?
Yes.
If I'm talking with the Revenue Canada hat on, the IRS.
Turn off the camera. Turn it off.
Yeah, turn it off.
Go dark. I'm kidding. You don't have to turn off.
If it was a cash gift, you can do what you want. However, turn it off. I didn't say that. But no, truthfully, you should put it on your profit and loss statement in terms of good accounting standards and procedures and not landing yourself in jail. And you could put it in as a line item or just put it under design fees. It doesn't have to necessarily have a separate, unless you're receiving a lot of cash gifts from your clients.
What are you doing for that, Kim?
Yeah, exactly.
Wow.
What's going on?
I gotta have my
As I
services.
said, I can learn a
over
lot
here?
about your business by what the line items say.
What if it's in your personal name, not your corporate name? Like, come on.
What's that? Do you receive
You're
a
talking
gift?
if you received a gift and it's made out to you personally, then you make a decision based on what your accountant tells you to do. Thank you, we're moving on.
Yes, thank you. And your value system, back to values. So the next area is just around creating your costs of goods sold and ultimately your gross profit. Now your costs of goods sold, that second column, are all of the direct costs of getting your service or your product to your client. Directly impacts your top line, your income. So when we're talking, and I see that, again, I go and look at a lot of profit and loss statements and it's not broken down. And sometimes their cost of goods sold are actually put into their expense column. The reason why this is so important that you have a separate cost of goods sold column is that it allows you to understand, regardless of all the overhead expenses you have in your business, what the gross profit is, how much money you return to your business after you pay subcontractors, after you pay your suppliers, your products, etc. And this gross profit number, I can tell right away how your business is doing. I don't even have to go into your expenses, just based on this number. And this is the area where I see the greatest opportunity for growth and for profitability, because it often, to me, tells me how much you charge for your services. Because if your consulting fees is really one of the areas where I see most money left on the table, you just don't charge for your time. If that gross profit number is not very high, you're paying your money out to your subcontractors and to all of your suppliers and not keeping any for yourself, which is a real challenge to grow your business and to be satisfied after that initial thrill of starting your business begins, you really start to feel it right here. So the way your gross profit is calculated is your total income, that top number, 227,525, minus your cost of goods sold, and in this case it's $169,500. See, what's interesting here is if you then have this information broken down, you can look at something like, oh, subcontractors, I billed out $75,000 for subcontractors, yet I paid my subcontractors $67,500. So right there you can do a quick calculation to see you made about $7,500 on your subcontractors. And you may think back to the amount of energy and time you put into getting that subcontractor set up, established. You are often the person selling your subcontractor in. Was it worth $7,500 for all of that work you did over the course of a year? I have found time and again that most designers say, no, I should be making more money there, but then it comes back to the confidence issue of how to do so. That's an insight. Again, with your selling your, the product purchases for clients, I see some of you who don't take any design discounts. You give them all to your clients. Again, that will be a choice on how you position yourself, but I think you're leaving money on the table if you give all your discounts away. I really do. Do any of you do that? I see a couple heads.
It's like lava life, they're not saying.
Yeah. So again, I'm not here to have you go, oh, I do, but it's questions you want to ask yourself. And if it's not just that you do it, it's the why. And I'm going to get into a why exercise for you later with your P&Ls. So you can start to see while this scoreboard doesn't actually say, oh, I'm making $7,500 on subcontractors, etc. It starts to give you insight and places for you to look to go, gosh, where am I leaving money on the table? Where might I make more? And I want you to ask questions from this profit and loss statement in looking at yours that you may not have ever asked yourself before. It's that moment to really look at them and understand them. From your gross profit, then we can go and look at all your expenses. And these are what are called your overhead costs. They tend not to be variable. And what a variable, it's called non-variable expenses, that whether you have 5 clients or you have 50 clients, they can more or less stay the same. This is not where the big flood of cash comes out of your business. Like it may be a big chunk of change, so to speak, but if you pay $50,000 for a building, for your rent for a building, which would be incredibly high, but if you did that over the course of a year, again, whether you have 4 clients or you have 400 clients, it's still going to be the same cost. Again, very important, and I look at this also with very finite detail to see what is going on inside of a business. And often, it's interesting, I'll look at this, and I'll say to a client, why are your membership dues so high? And they're like, huh? And I think, Kimberly, this happened with us. I asked a lot of questions about her expenses, and when we dug beneath it, we realized there was a bookkeeper misallocating expenses, which wasn't giving Kimberly an accurate picture of how her business was doing. And this was many, many years ago. But it was still a good insight to see, well, that shouldn't be there. How did that end up there? So the thing is when you look at your expenses, you want to have even, and I recommend you do not prepare this information, but you have to have the wherewithal to have an idea of what these expenses should be. And you want to look at it and go, wow, that's really odd. And ideally, you do work with an accountant who might ask you those questions also. Your bookkeeper probably won't. You want them to be impeccable around detail and putting the information together, but you want to have somebody else who can help you look through those and go, that seems very high. Why would that be the case? And as you look at this, your marketing expenses could be in here. And marketing, as we're learning, is more than just putting an advertisement in a newspaper. There's so many other elements to marketing. So part of your marketing expense could be also the fact that you go out and you do a ton of networking so that you can use that great elevator pitch or your value offering, speaking about that to different people, and that's a part of it. So you want to look and see how much money and try and quantify that you're spending in your marketing. And so if I look at my client's P&L and I see nothing allocated to marketing or any type of a membership or any expense like that, I got to scratch my head and say, what are you doing to business develop? How does that look? What's going on? Then there are a bunch of other general expenses that go into the mix. And the big line item here could be if you've got employees. That could be one of your larger overheads. And when you're looking at that expense and your resource expense around people, again, it's about where am I maximizing the fact that I've got these people in my company? And it may have me scratch my head again and say, you don't seem to be making money off of your design assistant or even your administrative assistant. How do you bill out for their time? And they may not. So my question to you is, do you bill out if you have an administrative assistant? Think about that as you look at your P&L. Do you do that? If you're not billing out for your administrative assistant for some of the work they do for your clients, that is something where you're leaving money on the table and you have an opportunity to make more. So once you've got all that information together, you can actually calculate what's called your net income. At the end of the day, how much money goes back to the business or back to you, depending on whether you are incorporated enough or not. So the question comes up, should I incorporate, shouldn't I incorporate? That really is a conversation for you and your accountant. However, I will tell you, if there's a lot of cash left in your business at the end of the year, you are missing out on a golden opportunity if you're not incorporated. In Canada, we have some of the lowest corporate tax rates in the Western world now. When Mitt Romney is pointing to Canada as an example of low corporate taxes, we've got low corporate taxes here. And it really can be, especially when we talk about your future, if you are keeping a lot of cash in your business, it taxes you at a much lower tax rate, which can be a shelter for you for future retirement, because none of us have pensions running our own business. So if your heads are spinning now regarding what I'm saying, write down this next step for yourself. Talk to my accountant about incorporation and how much cash stays in my business. I had a client that I started working with that it looked like she probably had about $150,000 left in her business bottom line at the end of the year. The problem is that wasn't her cash flow. Because she wasn't incorporated, she was taking that money out to pay lots of personal expenses. So even though her number looked like $150,000, which was great, her business generated $150,000 bottom line, she took most of it out and spent it on personal things like paying back credit cards, loans, mortgages, etc. So for her, being incorporated didn't work because she had to take the money out of the business to actually pay for a lot of personal expenses. That same client also, by us really drilling down on her profit and loss statement, saw that she was making about $15 an hour. And this was a woman who was probably top line making about $700,000 over the course of the year. But when we looked at her costs of goods sold, they were very high. When we looked at her expenses, they were relatively high. So what we did was she hadn't been recording her hours spent with her clients. And I said, ballpark it, how many hours do you think you spend over the course of a week working on your client jobs? So we just did like a literally back of the envelope number, and it really looked like at the end of the day she was making about $15 an hour. She burst into tears. The good news is fast forward, I stopped working with her after 5 years just 2 months ago, and she now consistently generates over $1 million a year in gross income, and her profitability is at the 20 to 25% mark, which means she's bringing in a lot of money to the bottom line, and I will tell you what 20 to 25% means in a moment. However, 5 years earlier, if we wouldn't have had, just as a baseline to step in and start looking at that information, we wouldn't have known even what that looked like. So again, your net income is this number. I'm putting these equations here because you may not know how this information gets calculated, and it's important that you do know what it means in terms of net income.